You've got a White House crypto czar. You've got a public position that Bitcoin is a digital commodity. You've also got a public position that it's the only globally acknowledged digital commodity. So the big existential question has been, is it a commodity? Is it a security? The conclusion of it being a commodity makes it 100x more powerful than a security. And then the second competitive question is there a competing digital commodity? And the answer is no. The reason Bitcoin works is because someone that you don't know with a problem you don't have in a place you've never been to settles upon Bitcoin as a solution, and then you're walking down the street in the random place, they're like, and they think, oh, we are comrades.
Bitcoin has been showing steady resilience recently, trading around $115,000 as of September 21st, 2025. Despite some ups and downs, it remains a leading digital asset, attracting attention from both retail and institutional investors. This growing interest reflects Bitcoin's unique role as a scarce and decentralized store of value amid global economic uncertainties and concerns about inflation. With its market cap holding strong near $2.5 trillion, Bitcoin's influence in financial markets keeps expanding. In a recent interview, Michael Saylor discussed how Bitcoin is increasingly seen as a powerful digital commodity, unlike any other. He highlighted the broader shift where institutional investors are starting to recognize Bitcoin's potential to act as a hedge and portfolio diversifier, especially given its fixed supply and growing adoption. Saylor pointed out that regulations and public policy developments have accelerated Bitcoin's acceptance, creating a clearer path for banks, corporations, and governments to engage with it. This institutional backing, combined with Bitcoin's performance, is transforming it from a niche asset into a mainstream financial instrument. Saylor also emphasized that while Bitcoin is volatile, its unique properties and network effects are driving momentum that many firms and markets worldwide are eager to tap into. This evolving environment signals a turning point for Bitcoin as more players consider it a critical part of the future financial landscape. Would you say Bitcoin's current growth justifies this increasing trust from big investors? Let's watch clips from Michael Saylor's interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Has your argument for the court case for Bitcoin evolved? And if yes, where does it stand today?
I think it's gotten much easier over the last 12 months because now you've got the explicit endorsement of the President of the United States. You've got a White House crypto czar. You've got a public position that Bitcoin is a digital commodity. You've also got a public position that it's the only globally acknowledged digital commodity. So the big existential question has been, is it a commodity? Is it a security? And the conclusion of it being a commodity makes it 100x more powerful than a security. And then the second competitive question is there a competing digital commodity? And the answer is no. And we fought over that for 4 years, but now there's pretty much no fighting. It's David Sachs said the White House acknowledges that this is a decentralized network, an asset without an issuer, it's special, and there's no second best, there's no other thing. And so I've said, if it's not going to zero, it's going to 1 million. The point really is every public company in the world is capitalized on euro debt or US dollar debt for 100 years. And now you have a commodity that's a scarcity that it's legal to capitalize a public company on. If you can capitalize a company on an asset that's appreciating 55% a year, and if the S&P is appreciating 12 or 13% a year, and if the after-tax return of euro debt, the euro 1 year rate was 200 basis points when I last checked, and SOFR's 400. So if you're capitalized on stuff that's got an after-tax yield of 2 to 3%, you're 10% less than the cost of capital. So ergo, every company in the world is capitalized on a capital asset that's bleeding 10% of their economic value every year. And this is the first time we've got one that is positively yielding. And we've only known that without debate. I mean, truth is, what settled the debate? The SEC approving Bitcoin ETFs in January, followed by the embrace of Bitcoin by the Trump administration, followed by the designation that it is the unique digital commodity in the world by David Sachs in March. That's how long, plus followed by the accounting profession mandating fair value accounting, and the Secretary of the Treasury telling banks, and the banks, not just in the US, but by inference, every bank in the world is being directed to start banking Bitcoin by the head of the Treasury, the FDIC, and the OCC. So all of that dates to November 5th of last year. So we're really we're not in at the end of the year one. We're in year one of institutional adoption, the inflection point where it's pretty clear it's not going to zero. And it's pretty clear that it's at least as valuable as gold. But no one can capitalize on gold, so it must be 10 times more valuable than gold. Nobody can stop it. No one wants to stop it. And yet 99% of corporate executives don't appreciate it. The people that embrace Bitcoin first are people who either felt that their path to success was blocked by the conventional world or the traditional world, or it was hopeless, or they're staring at a certain death. And so I think that the people that get it first, they're the teenagers, the 20-somethings. Every time I go to a conference full of wealthy people, it's always the sons of the billionaires who know me. Like, I'm very famous with rich kids. All the rich kids in the world know me. All of them. They're like, could you convince my grandma to buy Bitcoin, or my dad? I want you to talk to my dad and explain to him. But so it's the 20-somethings, and they're looking for the next thing, or it's the zombie companies, or it's the meta planets. It's like, I had a hotel chain, it's going bankrupt, I'm dead. It's the people that have a terminal illness. So they're all very motivated to open their mind to a new idea. I think that if you're comfortable and happy, you're not. I think that the inflection point was November 5th of last year. If you had to point to one, this entire industry was waiting to see whether the securities regulators would embrace it, whether the banking regulators would embrace it, whether the commodities regulators would embrace it. And I think we knew the answer. We knew we were going to win in 2020, but it was going to be a long, grinding battle of attrition to win, but we knew we were going to win. But I think after November 5th, it became like a landslide obvious. It's like, okay, the entire government flipped. The Senate's pro-Bitcoin, the House is pro-Bitcoin, the Cabinet's pro-Bitcoin, the head of the NSA, the CIA, the FBI, the healthcare, the Department of Health and Human Services, they're all pro-Bitcoin. All the financial regulators are pro-Bitcoin. And everybody else in the world, every other regulator takes their cues from the US. Even if they claim they don't, even the enemies of the US, the Russians, the Chinese, anybody that's deemed to be a political competitor, they still actually take their cues from the US. So if the US embraces this as a digital commodity, Hong Kong flips, China flips, Russia flips, everybody flips. And the dominoes are falling pretty rapidly for the past 6 months. I think that the European markets are catching fire. If you look at the results of Blockchain Group or Smarter Web Company or H100, there's just a lot of Bitcoin treasury companies popping up here. There's probably going to be one unicorn, or superstar in every single market that catches fire and grows 100% plus a year, or hyper growth, and then you'll see a dozen other that will follow it. And I think they will do it because the equity capital markets in Europe are moribund, and the credit markets in Europe are weaker than the U.S. Right? I mean, the U.S. credit market is 4% interest, or 4.20 for a one-year bond, but in Europe it's like 2.20. So basically you're not getting any yield if you're a credit investor, and the equity's based upon growth, but all equities valued based upon future expectations of fiat cash flows. And if you're not growing fast, then the equity is going to be weak and illiquid.
The core argument for Bitcoin has shifted significantly over the past few years. Initially debated heavily, there's now widespread recognition of its unique status. The White House has acknowledged Bitcoin as a decentralized network and a special asset without any real alternative, compared to traditional assets like stocks or bonds. A turning point came with several key developments starting in late 2024. The SEC approving Bitcoin ETFs, the Trump administration's support, and regulators classifying Bitcoin as a unique digital commodity. Since then, major financial agencies, including the Treasury, FDIC, and OCC, have encouraged banks to start handling Bitcoin. This marks the beginning of institutional adoption, where it's clear Bitcoin won't disappear and is at least as valuable as gold, if not more, due to its digital nature and accessibility. Early adopters are often those outside traditional finance, young people or companies facing dire situations, motivated to explore new opportunities. While most corporate leaders still don't fully grasp Bitcoin's value, it's gaining momentum, especially as markets in Europe heat up. Lower interest rates there compared to the US make growth-driven assets like Bitcoin more attractive in these regions. Let's watch more clips from the interview.
Like, you can either be crushed underfoot by evil superheroes, or you could take compound V and you become the superhero. Or in this case, compound B, right? So I think it's one of those things where at some point the company says, well, I'm not going to be Apple and Google, and I'm either going to be crushed to death or I'm going to be a superhero. And then Bitcoin comes along and Bitcoin offers to make you a superhero. And so take compound B, and what happens? You take $50 million, you buy Bitcoin with it, you have a $50 million business growing 60% a year. There's not a single company in Europe growing 60% a year, right? I don't think there's, well, not that I bet you if we look at all of the companies with a market cap of $1 billion or €1 billion or more in Europe, I would be shocked if there's one that's growing 60% a year. And yet every single company in Europe, if they simply recapitalized to Bitcoin, would be bolting on a company growing 60% a year to whatever size of their balance sheet is. And then once you've done that, the aha moment is now you can issue equity or credit instruments, recycle it back into Bitcoin, and grow 100% a year. And so it's like, do you want to be immortal, destructible, you know, or do you want to fly with laser eyes and be indestructible? And it's like, you have to take the compound B, and it may be a little bit scary. It is volatile and it's bubbling. It's right? And it's orange. You have to drink the orange fluid. But I think it's that simple, really. And it's happening. And what you're seeing is people are like, I want to be a superhero. Why wouldn't you want to be a superhero? So generally, the problem with corporate adoption is one conservative or traditionalist on the board cripples the company. In a country, you have a lot of parties and a lot of concerns about that. So the obvious winning move is if I ran a country and if I had the power, I would print my currency, buy Bitcoin. And after I finished with that, I would borrow money, sovereign debt, I would print debt, and I'd buy Bitcoin. But I don't have a country, it's above my pay grade. And countries have a lot of other dynamics. There are a lot of other political actors. You've got your unions, you've got your political parties, you've got the IMF, the World Bank, you've got the opinions of your neighbors, you've got your opinions of your citizens, you've got your opinions of everybody under the sun in the media. And so I'm not here to tell you what they can do. I'm an idealist. That's what I would do if I could. But neither am I critical. The truth is, there's 1 million people that don't go 150% all in on Bitcoin, and I don't judge them for it. Maybe they had a reason to not do it, right? The reason Bitcoin works is because someone that you don't know with a problem you don't have in a place you've never been to settles upon Bitcoin as a solution, and then you're walking down the street in the random place, they're like, and they think, oh, we are comrades.
Yeah.
Right? It's like, I don't know you, but I had a different thing, but we solved it with a common network and a common asset and a common protocol. And you might not even have time to figure out what their problem is, but it doesn't matter. They're helping you. You're helping them. There's one group of people, and they tend to be traders, and they're charters, and they like to, fill up their charts and their computers with lots of data, and then they like to back calculate and back solve and do regression models, and they try to fit cycles, and they try to use whatever happened in the past to predict what happened in the future. And I think that idea of using data from the past to predict what happens in the future, it works in a closed system, in an adiabatic system, where there's no new energy, there's no new structural elements introduced. And so I get it for predicting a pendulum or a swing or something like that, right? Or maybe tidal forces acting on the Earth for the last 5 billion years because the moon hasn't changed. But if a new moon came along, right? If all of a sudden a second moon and then a third moon came along, and someone was looking at all the tidal patterns for the past 100 years, you would say, are you crazy? There wasn't a third moon 100 years ago. So if the structure of the system changes, if it's not a closed system, when it's an open system, when new developments are forming, I don't think you can look back. So for example, the crypto winter took place because massive structural leverage and rehypothecation. You stacked up, people took, they issued Luna token, and then they issued, UST. They issued Terra stacked on Luna, and then they traded UST for Bitcoin. And then when the Luna collapsed, the Terra collapsed, the Bitcoin got panic sold, and that created a rippling wave of redemptions, and it bankrupted FTX and Genesis and BlockFi and Celsius. And they had daisy chains, a whole set of credit instruments on top of tokens, which were 100-to-1 levered, backed by air. Okay, and if you have that structure where you have, if I took a public company and I capitalized it on a security with 1% of the float outstanding, and then I took another public company and capitalized it on the second public company with 1% of that float, and if I took a third public company and capitalized it on the second, and I would have 1,000-to-1 or 10,000-to-1 lever, and there's $1 million backing $10 billion of market cap, then when I crush the one in the middle, everything collapses and you get your crypto winter. And that's what we got in 2023. You had massive structural leverage that was backed by air tokens from all of these crypto cowboy unregulated exchanges. They were making loans they never should have made, backed by collateral they never should have taken, right? And so you get a 75% drawdown. Well, what's the difference today? Well, first of all, they all got wiped out, right? All the companies went bankrupt. They're all in jail. There is no FTT token. There is no Terra Luna token, right? Anybody stupid enough to give you a $2 billion loan in return for $1.5 billion of yo-yo token, like, where are they, right? They're either in jail or they're bankrupt, or they've quietly withdrawn from the industry. So the industry grew up. It grew out of that crypto cowboy phase.
Michael Saylor explained that Bitcoin offers companies a chance to be superheroes rather than get crushed in a fiercely competitive market. He suggested that by investing even $50 million in Bitcoin, a business could effectively add a new asset growing at around 60% annually, something rare for established companies in Europe. This isn't just about buying Bitcoin once. He described how firms could keep recycling equity or credit into Bitcoin, fueling growth rates that far exceed traditional industries. Saylor painted the choice as one between being mortal and destructible, or embracing Bitcoin's volatility to become indestructible. He also talked about those who rely heavily on historical data and charts to predict Bitcoin's future. Saylor pointed out that such backward-looking models often fail in open systems like crypto because structural changes regularly happen. He gave the crypto crash of 2023 as an example, caused by excessive leverage and interconnected risky tokens like Luna and Terra, which collapsed and triggered a domino effect, wiping out major firms like FTX and Celsius. What's different now, he said, is that those risky practices have mostly vanished. The companies involved have either gone bankrupt or been shut down, marking the end of the crypto cowboy era. This cleanup means the industry has matured, leaving behind reckless lending and unbacked tokens, and has strengthened the foundation for Bitcoin's future growth. As we wrap up, with Bitcoin's price steady around $115,000, do you think Bitcoin is ready to become a mainstream financial tool, or is it still too risky for most portfolios? How do you see Bitcoin's role evolving as more institutions, banks, and governments start embracing it? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.